The quarterly consumer price index is always all important, but it seems tomorrow's less so. According to the market, whatever the March quarter CPI is, a 1/4% cut is a certainty. And there's a sneaky 30% chance of a 0.35% cut to get the cash rate to around 3.75 and a 12% chance of a 0.5%. Today is President Trump's 100th day in office, and since he was inaugurated, the US dollar has fallen 10%, which is the exact inverse of Ronald Reagan's first 100 days. But it's an unfair comparison. In 1981, the Fed cranked US interest rates up to 22% to combat the inflation from the oil shocks of the 1970s, which had nothing to do with Reagan. In 2025, the Fed is cutting rates. Donald Trump's tariffs are likely to lift inflation and stop the rate cuts, but he's also been abusing the Fed chairman, Jerome Powell, for not cutting rates fast enough. Tonight, the Aussie dollar was an oasis of calm at 64.2 US cents, up from 64 last night. And the local share market rose 1%. Woodside went up 1.5% after announcing a huge $27 billion gas project in Louisiana, not Australia. That's despite the fact that President Trump is trying to bring energy prices down with drill, baby, drill. But Woodside says it's too hard getting stuff approved here. Its expansion of the Northwest Shelf has been held up for 6 years. Last night, the oil price slid 2.4% and thermal coal caught fire, up 4.9%. And finally, Australian exports of wine to China have rebounded to more than $1 billion over the past 12 months, largely because they are buying more expensive posh wine. Exports to the rest of the world declined 13%. And that's finance.